Welcome to Renovate Ed, where we talk about all things home and renovation related. Hosted by Jennifer Goldsby, a renovation lending expert. Let's get renovated.
Today, I'm going to talk about a topic that isn't necessarily isolated to renovation, but something that touches on renovation lending. We're going to talk about local lenders versus maybe more boutique lending institutions. And the reason that I want to chat with you about this is because a lot of realtors are going to push their buyers to use a local lender. And that may be very helpful in many circumstances, but there are certainly circumstances where using someone who's not local may be more advantageous. During this podcast, we'll talk about the pros and the cons of working with a local mortgage lender versus choosing a boutique or niche lender, why that matters, mostly because many buyers assume that local's better, but that's not always the case. And of course, I'll share some personal insights from inside the industry. Let's get started with the pros of working with a local mortgage lender. There are certainly many reasons why this would be a benefit to a buyer. Obviously, local lenders, they're going to have some community knowledge, understanding of the local real estate market, property values, regulations. When I think about this, I think about states like Iowa that have very specific laws, regulations, guidelines around title insurance, or maybe states like Florida, and certainly there are others where property taxes are handled quite differently than the average state. So definitely it helps to work with somebody local or even somebody within that state who has an understanding of things like that. Local lenders also tend to have established relationships for obvious reasons, right? They've got ties with local real estate agents, appraisers, title companies, and that can prove to be very helpful. It doesn't necessarily mean that lenders who aren't local to that area don't have some relationships as well, but usually those relationships are localized when you're working with a local lender. They can offer oftentimes personalized service, and certainly they can accommodate face-to-face meetings, direct communication for those who prefer to be in person. Personally, I find that nowadays that's very rare. Used to be when I started in the mortgage industry, I would take loan applications over a kitchen table. Literally, as the years went on and society changed, fewer and fewer people wanted business people in their homes. And then it turned to everybody coming to the office. And then nowadays, of course, most people want to do everything digitally. But for those who still prefer the good old-fashioned way of a face-to-face meeting, that's definitely an advantage of using a local lender. In my observation, a lot of times local lenders tend to be smaller lenders. They don't have the political issues that maybe a larger lender would have to deal with. And oftentimes that translates into faster turnaround times from start to finish, from application to closing. Of course, a lot of local lenders, they'll have in-house processing and underwriting. Maybe their closers right there in their office. That can certainly make things a little bit easier when it comes to processing and closing a mortgage. However, there are some limitations of using local mortgage lenders. I wouldn't say that this is necessarily true of every local lender, but I'm going to generalize here for a minute. In general, more local, smaller lenders, especially banks and credit unions, they tend to stick to conventional loans and basic FHA, VA options, maybe USDA. So limited loan program options for buyers. A lot less experience with renovation, construction, or niche loans, maybe non-QM loans. You might need to partner with somebody who's not necessarily in your backyard to find a lending institution that has a non-QM arm. They may be limited for, say, jumbo lending, for example. I'm going to say this, and I'm assuming that it's going to be a controversial statement, but it's just based on my 20 plus years experience in the mortgage industry, that it seems that the local lenders, the smaller lenders, they don't have the same pricing advantages as the big boys. You may see higher rates or fees. In general, we're all working off of the same rates out there on the market. Fannie's price and Freddie's price and HUD's price, it's going to be the same if you're selling direct to those institutions, those entities. But obviously, each lender has their own margin on top of that. And if you're not doing the volume of the big boys, well, then you're going to have to charge more per unit, right? That makes sense. So I'm generalizing. It's probably controversial, but most smaller local lenders are going to tend to have higher rates and maybe even fees as well. You may also see some inconsistency in underwriting standards. If you're a large lender, you work nationwide, and many of them, maybe the larger independent mortgage banks, Many of them are working straight off of Fannie guidelines, Freddie guidelines, HUD guidelines, USDA guidelines, VA guidelines with a little bit of overlay. Every lender is going to have its overlay. But smaller outfits, again, namely banks and credit unions, they are going to typically have stricter internal policies and guidelines that can make it a little harder to get approved for a loan if, say, you don't have a high credit score, for example, or maybe they won't allow a debt to income ratio over a certain max. They might cap that. So you may find that some of the larger institutions that have a little more volume, that can afford to take a little more risk, can also lighten up on the guidelines, or at least not use so much lender overlay. So when would a boutique or a niche mortgage lender be a better choice? Well, in my opinion, if you need access to a unique loan program like renovation loans, I would say a local bank or credit union may be a good source for construction loans. I'll offer that. But renovation loans, maybe investor loans, loans for self-employed individuals who don't have traditional income documentation. Those are going to be instances where you might want to look at a boutique or a niche lender. That might be a better fit for you. If you need somebody who's got expertise in a specific financing type, I'm going to go back to the renovation loans. I'm going to use that as an example. That is a type of financing that is extremely specialized. It is very complex. Hard to understand the nuances of that type of financing. So if you're going to a local lender and you want to use a local lender and they do one of those a year or one of those every few years, that's probably not going to be a good fit. There's nothing mysterious about a boutique or a niche lender, but it could just be that you need a specific independent mortgage bank or IMB that offers this very specific type of financing that you need, and you may not be able to find that in your own backyard. You may need to expand your radius when it comes to lending institutions. Other lenders that maybe are not so local may allow for more flexible guidelines. If you've got some credit challenges, if you need alternative income documentation options, or if the property needs some work, those are instances where maybe your local guy isn't necessarily your best guy. And I alluded to it in the conversation about the local lenders, but other lenders, larger lenders, they may be able to offer more competitive pricing or more flexible loan structuring, maybe better rates, maybe more favorable loan terms than you're going to see from your local banks and credit unions. I do recognize that every local lender is not a bank or credit union, but generally speaking, local smaller guys, they're going to have some limitations. You may need to look elsewhere. Let's share a few real world scenarios of when this would be an opportunity to use somebody who's maybe not in your backyard. If you're a buyer and you need a renovation loan because your local bank doesn't offer, say, FHA 203K loans, that's a perfect opportunity to do some shopping. And it doesn't really matter where that lender is located so much as they have the expertise that you need. If you're a self-employed borrower who's struggling with traditional income documentation, you are not going to qualify with your tax returns. You're probably going to want to work with a lender that has a bank statement program or some alternative means of income documentation, and that may not be a local lender. Or if you're an investor looking for some creative financing options, that could be another time that a local lender maybe wouldn't be able to provide the service that you need. Thinking of something else here, maybe reverse mortgages. You may not be able to find a local lender who offers reverse mortgages. So there are certainly opportunities in the real world where local lending may not be the best option. And I am not by any means kicking the local guys. I'm local to somewhere. I'm local to Indianapolis, right? I'm in their backyard. But I'll just say that if you can't find the lending program or the lending partner that you need locally, there's nothing wrong with going outside of your backyard to look for somebody who's got the expertise. So how do you choose the right lender that's going to meet your needs? Well, first you got to know what your needs are, right? So it probably is going to involve having a conversation with somebody, some mortgage loan officer who can guide you in what you need and what you should be looking for, and then compare loan options. And you're looking for expertise over just location. Location's important. We talked about the many benefits of using somebody who's local, but it's not the only important thing. In fact, I would put a greater importance on expertise over location any day. Make sure you're asking the right questions. Ask your loan officer, which loan programs do you specialize in? Specialize in, not offer. Which loan programs do you specialize in? If you are looking for a renovation mortgage, for example, be sure to ask them, how much experience do you have with this specific loan. We'll call it a home style renovation loan. How much experience do you have with home style renovation loans? Be specific in your questioning. And then ask about their underwriting guidelines for unique situations. Specifically, you're probably going to want to ask about their overlay and just let them talk. Again, let's just emphasize the need to work with a lender who can match your needs, not just the most convenient location. Maybe a few final thoughts here. Main takeaway, there are going to be instances where using a local lender is the best option, but that is not always the case. It may not always be your best choice. So focus on expertise, not location. Make sure you do your research and be sure to ask the right questions. And then, of course, if you want to pick my brain anytime, you're welcome to do that. Reach me. You can visit my website at therenogal.com. I'm found on social media such as Instagram, YouTube at the RENO-GAL. You can email me if you'd like. Go to my website. You'll get my contact information or send a message. You're always welcome to call 8.
Now the legalese required to appease attorneys, compliance officers, and regulators. This podcast is hosted by Jennifer Goldsby, NMLS number 591226, Vice President, Renovation Lending. The topics discussed herein reflect my personal opinion. They do not represent the opinions of Diamond Residential Mortgage Corporation and its management. Discussions about loan programs in this podcast are not a commitment to make a loan. Programs, approvals, rates, fees, and loan terms are subject to loan applications, credit risk, appraisal evaluation, underwriting guidelines, and other lending or qualification criteria and limitations, and are subject to change without notice. Not all products are available in all states. Not all borrowers will qualify. Diamond Residential Mortgage Corporation, 582 Oakwood Avenue, Lake Forest, Illinois, 60045 847 9301. NMLS number 186805. For licensing information, go to nmlsconsumeraccess.org/entity-details.aspx/company/186805. Equal housing opportunity. Diamond Residential Mortgage Corporation is not affiliated with or acting on behalf of or at the direction of FHA, VA, USDA, Fannie Mae, Freddie Mac, or any governmental body or agency.